Welcome to Money Matters. Now, with presidential candidates already nominated, economists are urging fiscal discipline among the country's political elite to support the efforts towards stabilizing the economy. And this in order to avoid a repeat of 2011, where fiscal indiscipline associated with the elections shook the country's economic fundamentals, with inflation touching record highs, a near free fall of the shilling and dampened growth. But that's for another day, and this is coming up on Money Matters. Understanding what is exactly driving high interest rates today, and the story of a young ICT entrepreneur. Uganda imports most of the commodities used locally, and with the bulk of these sourced overseas, the country's importers often deal with shipping lines. Shipping experts, however, believe that many local importers are often short-charged, overcharged and exploited over lack of exposure and critical information in the industry. Charles KAREBA is Managing Director, Uganda Shippers Council.
Mr. KAREBA, it's always nice to have you on the show. Money Matters. You're most welcome.
Thank you very much, Charles.
Very good. Now I know you're the chairperson of the Shippers Council of Uganda. Break down for us what a shipper is and what you're doing as the Shippers Council of Uganda.
To be a shipper, you are the person that owns the cargo, being imported or being exported. Many people, when they hear of a Shippers Council, they relate it to the ship. The other one is the carrier. But the shipper is the person, and actually when you look at the bill of lading, the document that the shipping line gives you, number one is the shipper. The person who ships is the shipper. Then they would come and give you a vessel's name, that is the carrier. But the shipper is the owner of the cargo. And most of our shippers in Uganda don't know that. The most important thing is that the owner of the cargo must know that is the shipper. Eventually, as we go into this discussion, we shall realize what are his rights and what sort of problems that is going to maybe encounter, which are beyond him or her. And that's why you need a Shippers Council.
Now, moving on, why should someone care that we have a Shippers Council of Uganda? And I'm imagining someone in Chikubo or someone who is just a buyer of goods that are shipped into this market. Why should they care that you exist?
Of the shippers, how many know where their goods are originating, where they pass, and what happens, what process do they go through to reach them? Many times, these days you can even order things like online. So you sign an agreement, and most of the buyers want, they say CIF Kampala, meaning that me, I'm waiting in Kampala for my goods. Did you know the rate you are charged for the freight? No. The insurance, we shall come back to it. That's a very, very important one. Yes. They are charged with the insurance. Do you know? Even that insurance, there are many different categories. Do you know which ones cover your goods? Which route does those goods go through? When they arrive in Mombasa, what are the port charges? What are the relevant charges in Mombasa available? So the Shippers Council is supposed to help you on all these. When you have a problem, whether with the shipping line, with the transporter, with the freight forwarder, even with the insurance company where you started, that's where the Shippers Council becomes relevant to help you understand this. So they are ripped off. Then, as I said, you get here, you have paid everything, then all of a sudden the shipping line says, but we need you to pay this, you need to pay it because they have your cargo. And you just surrender and pay. But it's very important that they need to come to us. Even some of them already come in whenever they have a problem. And you tell them, no, approach it this way. Approach it that way.
Yes. Now, on that note, when you ask a number of people, they would say, well, I'm comfortable, I'm safe, because, I paid insurance for my commodities that are coming into the country. But tell us, as a person with experience in this, what do you make of the kind of insurance arrangements that most of the shippers in this country get or purchase outside this country especially? What do you make of that entire arrangement? And what could we be losing as a country or a region in that respect?
Charles, we have already had 3 workshops purely talk about insurance. The plight of insurance can be measured in how much money we spend. There was a study done between 2007 and 2011. East Africa, the 5 member states, spent 2.98 billion shillings on insurance, one item insurance. We shipped that money out. We have insurance companies here. Insurance companies that are in Kampala, insurance companies that employ Ugandans, and a person you can go to. An example, Charles, you are buying from a Chinese and he's selling you CIF. The goods get lost on the way. Where are you going to find that Chinese? Where? Even if you went there and bought things physically, the minute he knows that your goods had a problem, when you go back, they won't find him where he is. But if I've gone to you, Charles, as an insurance company here, and I have insured my goods through you, first of all, I know what is covered. Insurance companies, insurance covers for cargo, there are 3 categories. And each one costs different because of what it covers. The all risks is the most expensive. Then you have another one that covers about 12 items only out of the total risks. You have the last one which covers 6. So they can give you the one of 6 and you think your goods are fully covered. If a ship catches fire and part of the goods catch fire, the shipping line will declare what they call general average. When they declare general average, it is like an SOS, come to our rescue. The shipping line carry your goods, but you pay them to carry your goods. When they do that, and you find, for instance, general average was not covered, you are supposed to pay 20% of the value of your goods to the shipping line that burnt your goods. You get me? So, first of all, by the time you ship locally, you know what is covered, and you have somebody you can go to when there is a problem.
Thank you very much, Mr. KAREBA.
Thank you, Charles.
This week on Insight, latest World Bank report on doing business indicates that a lot more is required on ease of business registration, where Uganda barely had meaningful change. And while the country scored 122 up from 135 out of 189 countries in 2015, it remained static at position 168 globally surveyed on ease of starting a business. Why this is the case is part of our focus today.
Fledgling enterprises in Uganda are yet to reap from the current drives towards full automation of business registration in light of a new ranking by the World Bank.
In the next 2 or so months, we are opening up an office in downtown Kampala to ensure that the people in Chikubu, that people in downtown do not have to walk to us to get the service. So the strategy is to go to the people who need this service and actually give the service. The ultimate aim is to eventually have all businesses formalized.
The Doing Business Report 2016 has seen the country's overall ranking move 13 places from 135 to 122 out of the 189 economies surveyed globally.
There are a couple of other areas that Uganda can focus in the year ahead in order to make sure that it keeps running and keeps performing well, and the results that you're after are, of course, a vibrant private sector, an increase in private sector investment in Uganda, in employment of the youth, about 500,000 new job entries into the Ugandan labor market every year. There has to be opportunities for good jobs for the youth of Uganda.
Notable improvement, however, has been captured on indicator number 5 on getting credit which is being attributed to the new Finance Act.
And the personalization of the collateral registry, movable assets registry, should help improve the getting credit indicator further, notwithstanding that the Bank of Uganda CBR has gone up purely to crowd out the private sector credits.
This indicator enabled Uganda surpass 86 countries to a new ranking of 122, up from 135 in the earlier report on ease of doing business.
If Uganda Registration Services Bureau, National Social Security Fund, Uganda Revenue Authority and Kampala City Council Authority can focus on the reforms that they are currently implementing and come together and ensure that they have a seamless service, that would really improve the starting business indicator and would move it from the 67% to about 90% in the 2018 report.
On dealing with construction permits, the critical sector to employment and economic growth managed 5 new places from 166 in the previous survey to 161.
We hope when we put in place most of these reforms associated with the support activities, which include as well improving other areas of land administration and management in general. That means physical planning as well as land valuation, surveys and mapping. Once we improve most of these things, we expect a much better performance.
Among the other 10 indicators that are captured in this annual survey on doing business by the World Bank includes getting electricity, paying taxes, enforcing contracts, and resolving insolvency.
Going forward, we want to extend the tracking system to Mombasa. We want also to do more simplification. And we are looking at performance measurement. When I looked at the World Bank report, I noticed that some of the things that are holding us back, it is something to do with the compliance. Both, I think, majorly by our stakeholders. So we want to go into performance measurement. We need to measure ourselves, how long are we taking to clear the goods? And therefore, the same measurement will apply to the clearing agents, the transporters. I anticipate that next year, our ranking will further improve.
The market is today contending with big interest rates following the central bank's steady increase of its benchmark rate, and we try to understand why every time the central bank rate is moved up, commercial banks move even higher their lending rates. Plus, what exactly goes into these rates?
As a borrower from a financial institution, you have probably encountered an increase in the interest rate charged on your loan. Here's what feeds into the decision by commercial banks to increase the interest.
So to lend somebody, you're taking a risk on that person. There's the risk that either they will fail to pay, and in the general pool of customers, out of 100 customers, maybe 1 or 2 will fail to pay, and that also is priced for all of the customers. So the 3 determinants of interest rates is the cost of funds, i.e. the interest we pay to depositors, the cost of running business, the operating cost of the business, say branches, the staff, electricity, etc., and the credit risk.
The argument could then be why the increase in interest has to affect existing loans as well and not just new ones.
Take any business. Let's say you have a stock, you sell sugar. If the price of the supplier changes, you must also factor that in, even in the existing stock that you have, even before the supplier's prices changed, so that you are able to buy and replenish your stock. It's the same dynamics for banking. When any of those costs I mentioned above changes, we must reprice for everybody, new or existing, so that we are able to lend to the next person.
Economists, however, argue that there could be instances where financial institutions hike the interest beyond what it should actually be.
Well, we must say in some cases, surely we see our banks having some little element of extortion, because sometimes really this funds you. First of all, if you say you have increased because, for example, the bank rate has been increased, why do we why do we see you becoming unreasonably profitable? It means there is an element you actually did it beyond what you had expected. Though legally they are actually protected.
But as a customer, there's something you can do to safeguard yourself from this.
What you ought to do, and by the way, especially for big borrowers, if you borrow in billions or millions, 500 plus, the bank can listen to you, you negotiate with them the contract that favors you. For example, you could put a clause that actually, even when the central bank raises the banker rate, for them they will not change the rate. That will be until the entire credit period is finished.
So in the midst of the high interest being charged by commercial banks, it's important that as a borrower, you borrow against your earnings, meaning borrow what you can afford, but also pay attention to the contractual agreement so that you know what you're getting yourself into.
The rollout of the ICT revolution has not only opened up space for innovations and businesses, but also opportunities for young entrepreneurs, offering solutions for different institutions like education and the power sector. And this week on The Entrepreneur, we introduce to you Gabriel Olowo, an ICT solar solutions entrepreneur. After practicing ICT in most East African countries, Gabriel's inspiration to start this business was driven by the desire to bring solutions for efficient and affordable use of ICT platforms in Ugandan schools and communities.
I previously began doing my IT in ERP, Enterprise Resource Planning Systems, which I did in Tanzania, in Kenya, Mombasa, and partly in Kampala. Then along the way, I started identifying a little bit of problems, issues, because when we were setting up systems, we realized that a lot of people didn't have any IT skills, and the problem came down to where they began, where they studied. So when we visited schools, we realized there was a gap. Students never had time except during examinations.
Introducing his products, which are solar powered, to the market, he says was not an easy task because of attitude issues.
In Uganda, anywhere you go, they'll ask you, where have you done it? How does it look? So it was very difficult to sell any of these items that you see without physically having it, without showcasing. Now, we opted for installing in one of the schools. And when we installed in one of the schools, people said, no, this school is high-end, they can afford. So it kind of watered out what we had done. So we decided to then get the miniature setup of the system, which you saw, and put it in office where people were able to come and freely try and test.
Gabriel's company now offers a wide range of products, including smart whiteboards for learning, among many. This entrepreneur says he mobilized funds from his first clients, which he used both as startup capital and investment.
Together as a group of friends, we set up this company, put some money together and did the first implementation. When the cash came in with the profit we had made, we were able to multiply it with the next setup. So along the way, we've learned to use the existing cash flow and also involve and interest some banks who are already having these schools and institutions as customers.
Thus far, his main clients are schools, as he looks forward to bringing other institutions on board.
We serve schools. We found the main demand was for schools. The main purpose was to give schools an IT end-to-end solution.
Gabriel also admits that the biggest challenge facing his business is the mindset of some of his school heads towards his products.
Teachers or the head teachers, getting them to come and see the equipment, getting a meeting to come and agree the budgets that they were running. You know, we sat down to help them. One of the challenges was they were collecting the money, and some of this money was not being channeled to what it was supposed to do. So convincing them that, you know, we are your IT people, this is how you should spend this money.
Today, his company has grown, and he prides himself on the fact that his group has been able to help ease on learning using smart ICT solutions.
We were getting the messages across to the students through the teachers, through the equipment we had set up efficiently, because the students were the ones who started demanding for more content, for more hardware, and that brought joy to us.
And now a look at what's happening in the world of markets. That's it this week on Money Matters. Thank you for your time. My name is Malcolm Sime. We would like your feedback. Send us a text on 6565 or look for NTV Money Matters on Facebook. Leave your comments and views. Otherwise, keep it on NTV. We're turning on your world.